You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music must mean one thing. It is Friday. It is noon Central. It is 1 p.m. Eastern. It is time once again for Volatility Views, the premier program for volatility traders. Yes, we're back, listeners, after our hiatus last week due to the market holiday. We're back, and we're raring to go to talk about a whole bunch of volatility action, the trades, the trends, the unusual activity, all the fun stuff going on in the world of volatility. I want to remind you at the top of the show here, if you like what you hear, this show, anything else we do on the network, nearly a dozen programs coming at you throughout the week here. Keep rating and reviewing. It really does help new folks discover the program and indeed the content. We know there's a slew of new people discovering the volatility market every day out there. So give them a place to turn to in these crazy, unprecedented times and keep rating and reviewing. Keep those questions coming too. I'd love to hear from all of you guys and gals out there. Let's see who we're hearing from on the old program today. First, I'm pleased to say we're going back out to the MIAX hot seat where we are joined once again by our old friend, Mr. Shelly Brown, the EVP over there at MIAX Options. Shelly, welcome back to the Volatility Views program, sir.
Mark, thank you for having me. Glad to be back. How's things?
Things are good. A little bit of vol to talk about, or a little bit less vol than it was on our last show. But we'll get to all of that in a little bit. Then also joining us from deep in the heart of Texas, where he's busy enjoying a brisket, probably right now as we speak. We have the greasiest of meatballs, Mr. Mark SEBASTIAN from OptionPit.com. Mr. Meatball, welcome back to Volatility Views. It's been a couple of weeks. Remember how we do this thing, sir?
Yeah, no, I missed the show last week. I felt a little empty without getting my weekly fix of both the spikes and the VIX.
Yes, the world itself was emptier without a vol view. So let's see if we can make up for it as we dive right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do just that. We review the week that was and indeed still is, from vol trading and trending and analysis and unusual activity and all sorts of fun perspectives. And coming into showtime, we're seeing after a mostly green week, the market's pretty much mostly green yet again today. NASDAQ kind of struggling to find its footing out there, up a little bit north, 0.05%. The S&P and the Dow both up about 0.25%, not quite the effervescent up days we've seen for the better part of the last couple of weeks out there, but it's still green on the screen. And of course, there's been a lot of green since our last show, which means the vol products have come down a wee bit since our last episode a couple of weeks ago. Coming into the start of the show, spikes is right around 17.5, puts it down 1.5 from our last show. It's actually trended down a little bit even since then, down about 17.35 or so. Same deal out there in VIX cash land. Coming into the start of the show was right at about 17, puts it down about 1.75 points from our last show. Of course, it drifted even lower. It's back in a 16 handle right now, and we know it got into a 16 handle several times over the course of the past week, which again is, spoiler alert, not a level any of us had on our crystal ball from a couple of weeks ago. VVIX staying around that 100 level now at about 101. That puts it up a whopping point from our last show. It did dip decently below the triple-digit level for a little bit there as well, which is surprising. VVIX hasn't gotten back below 100 since the dawn of the pandemic, well before it actually. So getting back to those levels again, kind of interesting in and of itself. So a lot to unpack. Let's go around the horn. Let's start out there in the land of, let's go back to the MIAX hot seat because we haven't had Shelly on in a wee bit. Shelly, a lot to talk about since your last appearance, including the numbers are out hot off the presses earlier this week, not just for the entire industry, which, spoiler alert, it was the best month in the history of the options business. March blew the doors off. It buried the needle by just about every respect. So you're talking March, you're talking January, and then February, the number 1, number 2, number 3 months of all time in the world of options. So it was a pretty gangbusters quarter out there from an overall options perspective. But it seems like, Shelly, you guys over there at MIAX just put your numbers out recently too. Sounds like you guys had a pretty decent month over there at MIAX as well, sir.
It was a great month, Mark. Certainly the volatility in the marketplace has spawned so much additional interest in the trading of options. A lot of that is retail, thus electronic. We're a beneficiary of that electronic flow. Saw our market share across our 3 exchanges up around 13 and change, which is up significantly from last year. Obviously, all ships rise with the rising tide. That's a good thing for the industry, but very happy with our positioning at MIAX and the acceptance of our systems by all the member firms.
Yeah, that market share number really speaks to you guys are doing something right over there. If you don't pay attention to the options business on a day-to-day level, listeners, firms fight for every fraction of a point of market share out there. So to be able to claw some of that out, particularly in the most active year in the history of the options business, probably means you guys are doing something right over there, Sean.
Yeah, things are going right. They like the systems. We've listed a lot of additional classes. Month to date, we're about 13.6 for this month, trending higher, about 14.5% this afternoon rather. Very happy with the way things are going. And like I said, nothing but positive responses from the members.
I love how you guys have minute-by-minute market share breakdown. That's great. Deeper in the well than I am, which I like. That's your job, Shelly. So that's a good,
exactly.
That's a good thing. Let's go back out now to deep in the heart of Texas. Mr. Meatball, it's been a lot of vol on the screen, maybe a little bit less vol now than there was a couple of weeks ago when we last talked here on Volatility Views, but a lot's been going on in the last couple of weeks. What's been catching your eye in the world of ever-vanishing volatility, sir?
Yeah, the great vol suck has happened, and we've seen just volatility really come out of the market. The VIX has now been below 20 all week. The VVIX, like we said, and I'm sure the Viking would say the same thing, traded below that 100 level for 4 days straight. Yesterday, we're recording this on Friday the 9th. Yesterday, Thursday the 8th, was the busiest options day for volatility products, I think, since January. So it was a really busy day. And we're seeing some real themes start to develop. But good news for spikes, good news for VIX. I think we're seeing the return of the hedger, the vol hedger, which I think is a huge deal for vol traders, because that is the group that has been missing. Those that actually want to use volatility to hedge. The traders have been there, but the hedgers have not. And I would say that they at least started to come back in a big way yesterday.
But yes, some size prints going up to the upside for a change in July yesterday. We'll get to that in a little bit when we start breaking down the VIX options here, listeners. Let's go out to the futures now, too. That's where we like to start our volatility journey. I know, Shelly, Tom was on the show a couple of weeks ago kind of detailing what you folks have been up to incentivize the market makers out there on the futures side of the space. We all know the better, the tighter, the more liquid the futures become. That's going to be reflected in the options. Since then, you guys have added another wrinkle to your futures arsenal, going out with the zero exchange fees. Why don't you catch us up on all the different programs you have going on the futures side these days, Shelly?
Sure, Mark. Thank you. So as you mentioned, we cut our fees, exchange fees, to zero for Spikes futures. That'll be for at least through the end of June. It has sparked additional interest. We've had additional market makers come in. I'm looking at stats in the last few days. The VIX markets, as we know, in the front couple of months tend to be one tick wide. They are 90-some% of the time. We've found that with these incentive programs, we're now equal to the VIX market in terms of width about 45% of the time, and the balance we're just one tick wider, so we're on at least the bid or the offer. So the markets are much tighter. Our size has increased. Of course, we're not near the size of the VIX market yet, but it's up to about 12 to 15 contracts, average and median. So much more quality in the marketplace, more liquidity. So if you're out there scalping the VIX futures, come on over to the Spikes futures. You get virtually the same market width at much lower cost of execution.
It's all about saving those bucks out there these days. Let's see if that's being reflected out there in the land of the futures. Coming into showtime, we saw the VIX futures curve. We've been talking since the beginning of the year, pretty much, listeners, about this strange plateau that exists out there in the VIX futures term structure. It's still there. It's obviously markedly lower than it was a month or two ago. The longer portion of the curve has come down, but we still see that sort of inexorable march up to the plateau in the front portion of the curve. Then it kind of just flattens out there for the lion's share of the rest of it, right around a little bit north of the 24 handle, about 24.20 or so seems to be where a lot of that plateau is leveling out there. And then it drops back down to about 23.5 towards the end of the year. But still, that plateau shape still exists, is what we're seeing coming into showtime now. We're seeing that April future a little bit north of a 1.5 points, about 1.6 points premium to the cash. That's almost a point lower than it was a couple of weeks ago. Again, kind of squeezing some of that juice out of that term structure out there. May future, similar story out there. It's about 4-point premium to the cash. Again, talking about how you start kicking into that plateau level there. That's about a 0.5 point lower than it was a couple of weeks ago. So they're squeezing it out, but still, there's still a lot of juice to come in the latter portion of that curve. Mr. Meatball, what are your thoughts on this ever-evolving but still plateau-ish VIX futures term structure, sir?
Yeah, well, the curve is definitely steepened. You've got a real contango in both Spikes futures and VIX futures now. It's still flat in the back months, but those have come down incrementally in terms of price with the overall market. And really, you've got the contango. It used to just be that front month. Then it was the first 2 months. Now you're really getting 4 months of real contango, and then it really flattens out beyond July, and the activity has been like Shelly said, picking up in spikes, and it really does allow for when the tick is a little bit wider, it really does allow for some decent arbitrage. I'm surprised we don't have VIX guys trying to scalp between the two the two futures right now, like the old 1-5 ES versus big that they used to do on the CME, and then the old 1-5 trade between the SPX and the OEX. I think SHELLY used to trade the 1-5 back in the day. But yeah, there's some real opportunity. You can tell those spike futures are starting to pick up. And as those start to pick up, I think some of yesterday, if Hedgers start to return, I don't think the MIAX is publicly traded, but if it was, that would be something that would be on my radar, as is SIBO, because both of those are, I think, really simple retail plays for going long.
But yeah, the old 1-5 days. Yes, a little bit before my time, but I remember hearing the stories of the old 1-5, the S to the O, back in the SIBO days. Shelly, I'm sure you did a little bit of 1-5 business back in the day, as Mark alluded to. And also, before we keep rolling, you touched a little bit about V-Spikes. We've gotten a ton of questions. It seems like every show, it seems like we get something. What's the status of V-Spikes? What's going on with it? So give us a quick update. I know it's out there. It exists. Where can we see it? When can we expect to see it out here in our hot little hands, Shelly?
Yeah, it's out there. It's not being published out of the exchange yet. It is being calculated internally. It's obviously based on the spikes options markets. Those have tightened up somewhat since I was last on the show. Extent that we need them to tighten up to be truly marketable, and we believe that until those options markets tighten up, it's not fair to put out the V spikes calculation because it's based on relatively wide markets. Therefore, it may not be giving a true indication of what the vol is. So until those options markets tighten up, we're gonna withhold distributing the V spikes calculation. Hopefully, it happens sooner rather than later. Now that we have a tighter future, the options market makers have expressed more interest, and we see some testing going on. So hopefully, those tighten up sooner rather than later.
Yeah, we talked about that in the last show. We had some listeners asking about the experience of trading spikes options out there. Let's get to spikes options actually a little bit. Some paper out there on the OI breaking down the top positions out there in spikes options land right now. Listen, let's do a top 6. Let's make it fun because they're all pretty much equidistant out there. We've got the June, looks like a June risk reversal, the June 25 puts against the June 50 calls. That's 1,000 lot each of those, followed by the April 30-40 vertical. Remember, we talked about that 4-way went up a little while ago as well, listeners. April 30-40 vertical versus the 18-22 put spread. All of that in April. So a decent amount of OI going up out there. Starting to see the retail folks percolate in there as well, which we like to see. Again, we talked about it on the last show. It could be a little bit intimidating, as Shelly referred to. Initially, those markets could look a little wide, but if you kind of come in there and start working it in between, they actually are. I speak from experience. They actually are willing to step up and fill you. You got to put the hook out there first. Let them see you. But it's interesting stuff out there. Let's see what's going on in the land of VIX options now. Not a heck of a lot on the tape as of right now. Kind of a pretty average day coming into this portion of the show. We've got about a little bit shy of 250,000 contracts on the tape right now, about 245,000 out there. So again, not a blow the doors off kind of day, not like it was yesterday, that's for sure. We'll get to that in a second. ADV also coming down precipitously, 540,000 contracts. That's down 41,000 from our last show, but also worth noting it was a lot lower in between. Yesterday's volume helped perk it up a little bit. It was threatening to break 500K. So without yesterday's volume, I think it probably would have been a lot less. It would have been down about 80,000 or close to it. So yeah, a little bit of a resurgence in the last couple of days for VIX options. In terms of the hot positions, the hot sizable positions, this kind of gets back to what Mark was alluding to earlier, the return of hedgers, AKA call buyers, listeners, or call traders of any type out there in VIX land. If you've been watching and listening to this show and watching the vol marketplace for the better part of the last year, you know, particularly in the last 6 or so months, it's kind of been all puts all the time, which is somewhat aberrant. A vol product is primarily used for speculating and hedging against the upside. So to see everyone piling into the puts was kind of weird. There were many times here on the show where we had a hard time even finding a call position that could make it into our top 10 positions. It was 9 puts and maybe 1 call. So that's completely backwards for how VIX usually is. These days, getting back to a little bit more of a semblance of normalcy. It's not quite call dominated yet, but it's actually back to equidistant, 50-50. Calls versus puts in our top 10 out there, listeners. Cost you 128,000 contracts to break into the top 10 in VIX land right now. I'll get you to the May 20 puts. 128,000, that's kind of low for VIX, kind of reflecting some of that anemic ADV out there of late. Number 9, also 128,000 of the April double calls, aka the 55 calls. Number 8, 134,000 of the April 30s. Number 7, a $1.41 of the April 21 puts. Number 6, 145,000 of the April 18 puts. Number 5, 191,000 of the April 60s. I think we'll come back to that. Number 4, 199,000 of the April 22 puts. Number 3, 224,000 of the July 40 calls. I know we'll be coming back to that in a second. Number 2, 228,000 of the July 25 calls. And number 1, with a kind of small bullet, though, for VIX, 240,000 of the April 20 puts. That's the number 1 position out there. Total of almost 9 million contracts open. So the OI is actually fairly decent, about 5 million calls and about almost 4 million on the put side. So once again, calls outpacing puts from an overall OI perspective. So that at least is a little bit more normal for VIX land. Let's break down some of the paper that's going up out here. Again, not a lot going on the tape today. Your most active contracts today. Number 1, 15,000 of the June 25 calls, followed by 15,000 as well of the June 35s. Looks like a little vertical going up there, followed by 12,000 of the May 30s, 11,500 of the July 25s, and number 5 here, 11,000 of the May 26 calls. Let's get on out to yesterday, because that's where the action for the week was found. In fact, we marked about it on Option Block. That's how much paper was going up early. In VIX land, it was north of 500,000 contracts. Might have even been over 900,000 by that point. So it was a very aggressive day for VIX options. You'll see what it was when we break down the top 2 most active contracts. It was the July 25s and the July 40s, did 219,000 and 203,000 respectively. So that vertical went up once or twice, or about 200,000 times. Looks like they bought it for about $2. We saw blocks going up here, paper buying the July 40s for $1.30, the July 25s for $3.30, and then selling the 40s for $1.30. So doing that for around $2. That's the price of where the other legs tended to come in around as well. So buying that vertical, do you like that, listeners? 15-point vertical. Mr. Meatball, I think this is what you're referring to earlier in the show. I'm sure this trade came across your radar. It's far and away the largest VIX trade we've seen in quite some time. And hey, it involves calls. That makes it doubly exciting. What are your thoughts on this vertical? And as you kind of mentioned, the resurgence of call trading out here. And did any other VIX options paper come across your radar this week, sir?
Yeah, yesterday was just a bananas day for VIX. That call spread, I was 100% hit my radar. Traded in a lot of different blocks. The biggest was 45,000. It was a hedger stepping back in. The market's starting to say, hey, you know what, 17 is a level. Well, we'll start thinking about hedging, thinking that we can actually get some return if vol goes up. The July timeframe, I was likening it to, we're not deploying airbags, but they're throwing on a safety belt now because the market is at we're sitting at all-time highs, and these vol hedges are in. Yeah. The other big trade from Thursday, customer bought 47,000 of the May 16 puts, paying 23 cents. That was a sizable May put purchase. We saw pretty much, a April 15, 16, 17, May 15, 16, 17, June 15, 16, 17 puts. A trade across the board yesterday. That was the other area where we were really busy. And then this was probably a hedge against the actual July trade, but somebody went out and bought some June 50 calls yesterday as well in some size. We're still seeing some of these like September 60s, June 50s, not so many May 100s, which is nice. But we are still seeing some of these way out of the money calls purchased. But I think that July trade is more of our theme on the return to normalcy. But one commentary, and I would love both your guys' opinions on this. All right. Since the VIX was last, the VIX and spikes were last in the 15 range, right? Option volume is up, 3x, 4x, something along those lines. How does that play out for all these new retail traders that have never traded in a low VIX environment? Where are they going to go? What's going to happen to the YOLO trade, the meme trade, the NFT, the SPAC? what kind of what does all this option volume do to volatility and the downside and upside of both VIX and spikes as we kind of return to normal? I think that's a really interesting question that we have to think about.
Yeah, you're right. It's kind of the dispersion trade, right? Where you have the indexes settling down, and yet you have an index vol settling down, yet you have some of the constituents out there getting crazier than they ever have been. We were just joking about this on the option block yesterday about the notion of what would happen if we returned to the anemic first years of the Trump presidency when VIX was single digits for almost the entirety of it. That seems like a lifetime ago now. It seems like a complete impossibility compared to the amount of vol we've seen over the course of the past year. But we languished in single digits for the better part of a year. And a lot of people who are new to this space, they've never even seen anything like that. Shelly, I'm curious for you. Your guys are out there listing, spikes as well. So clearly a little bit of juice is a decent thing for you. Getting back to these lower levels where you can maybe reset for some upside trading, probably a decent thing. What are your thoughts for Mark's question there about this slew of retail participation we've seen now that perhaps we're heading into a new vol regime? What happens to those folks, sir?
Well, it's been interesting because we've seen a dispersion of volume across names that we haven't seen maybe ever in the industry. The number of names that require to get to the top 50% of the volume is greatly expanded now from what it was a year ago. If you look at SPY, they were back in that 8, 9, 10 vol era. SPY was often 13, 15, sometimes 18% of the options volume. Lately, we've been seeing SPY at 8, 9, 10% of the options volume. I think 12-day moving average is around 12% right now. We at MIAX, we generally don't list classes that don't have volume. We look for a minimum of on average over the last month or 3 months, 250 contracts a day. We had 2,300 classes listed. Now we're over 3,000 classes listed. You're just seeing a much more broad specter of which classes are being traded. I think that's driven a lot by the retail. They like the single stock names. So I think that's healthy for the marketplace. The risk is being spread out across more names. And I think that retail business is here to stay.
We know what this means, Mark. You know what we need? The newest option pit product. You need a meme stock vol index. What do you think of that?
The mix, the meme
mix, yes,
or the mics. We could call it the mics, so it'll be the meme spike, and I think that makes a lot of sense. You could almost look at that ETF buzz and see what the volatility is there, but I don't have high hopes for that ETF. One thing I was thinking about as we were opening the show is, we need to NFT the very first vol views and then and put that out on the blockchain, because that's the only other thing that's missing. And
that would go for some big dollars, sir. Big dollars.
Yeah. And, I think we're going to get a Bitcoin and Ethereum ETF here soon. And that is going to be a dynamo. I can't wait for that. But yeah, I think that this change in retail trading, we've got to think about skew differently. We've got to think about, because, it used to be, you buy puts, you sell calls. And, if you own calls, you're going to lose because calls suck. And, well, that's not the case anymore. But at the same time, these retail traders, sometimes it feels like they're playing whack-a-mole. And that's why this show is so important, because, and I mean this, I think that for the next, the last year and for the next year, the only trade that's really could be consistent out there is the vol trade and the trade in spikes and the trade in VIX, and making money off of its slow return to 12 and its intermittent spikes back to 20, pun intended.
Pun intended, indeed. Let's break down the rest of the crazy day that was yesterday from a VIX options perspective. We kind of hit the top ones already. The July 25-40 did about 200,000 each. You're talking 400,000 contracts just in that one vertical list. So a little bit of size coming back to the upside again. Just good to see a little bit of some sense of a return to some semblance of normalcy for as short-lived as it may be. The May 16s, as Mark mentioned, also going up the puts nearly 60,000 times yesterday as well. The July 15 puts following hot on their heels, 52,000 of those. So still some downside playing out there. It's not all upside specking all the time. And number 5 was the June 50 calls. Again, Mark mentioned those as well. Perhaps a bit of a hedge against the size upside those market makers had to let go. Wednesday, 550,000 contracts, so a little bit less paper on the tape. No other days this week crossing the 1M level from a volume perspective. The big trade, actually a pretty sizable trade on Wednesday as well. Of that 550,000, nearly 100,000, almost 90,000 of the April 18 puts going up. So still some put love going on. There's still some put action, I should say, out there. So still paper trading to the downside, followed by number 2, 52,000 of the SEP 60. So as I say that, people piling into the SEP 60s. Number 3, 30,000 almost exactly of the April 17 puts. Number 4, 26K of the June 20 puts. And round out the top 5 on Wednesday, we've got 26,000 as well of the June 42 halves. Tuesday, a lot less paper, 367,000 contracts on the tape. Number 1, such as it is, 32,000 of the April 22 calls. Number 2, about 29K of the April 20s. Number 3, 17,000 of the June 22 puts. Number 4, about 15,000 of the May 65 calls. And rounding out our top 5 there, 13,000 of the June 20 puts. Monday, kind of a middling day as well, 468,000 contracts on the tape. The most active contract, the June 20 puts, almost about 34,000 contracts on the tape, followed by the June 22 puts, 25,000 of those. Number 3, April 18 puts, about 25,000 of those as well. Number 4, April 20 puts, 17,500. And rounding out the top 5 there for Monday, about 17,000 of the April 25 calls. Getting on out now to your favorite vol products that you folks love to fade. They're feeling the fade, that's for sure. VXX, let's kick it off there. Come into showtimes at about 10:45. It's a little bit lower than that right now. We're right about that level. It puts it off about 1.3 points from our last show. So, yeah, a wee bit of downside going on out there in VXX. We've been talking about this for a while. The will they, won't they dance of VXX and when will they split? Usually, if past is prologue, by the time they get down to these levels, we're starting to hear, if not, we haven't already heard about the reverse split. Usually around the 10 handle is when this kind of stuff usually tends to happen, but at least so far, no joy on that front. Not a lot of joy on the volume front these days as well. Maybe some of that reflecting the fact that people are keeping their powder dry as they're expecting this reverse split. I know the once and future Dr. Vix, Mr. Rhodes, said on the show over a month ago that he was keeping away from VXX until he heard about the split. The Rock Lobster said it yesterday. He's staying out of VXX until he hears more about the split because you don't want to deal with these weird, funky strikes that you get in the post-reverse split scenario. So that could probably be a reason why these numbers are coming down. Today, about 220,000 contracts on the tape. So not bad. The ADV, though, is 319,000. That's down quite a bit, 51,000. From our last show. Remember, we're threatening 400K not too long ago out there. So VXX options definitely feeling the heat out there as they're continuing to move towards this level where everyone expects the split to happen, and yet no information on that front. Let's break down the top 10 out here. Looks like about 60-40 puts to calls out there. So kind of not that far away from where we've been for a little bit out there in VXX land. Number 10 cost you 26, almost 27,000 contracts to break into the top 10 in VXX. That gets you to the April 18 calls. Number 9, 27,000 of the June 9 puts. Number 8, 27,000 as well of the April 15 calls. Number 7, almost 28,000 of the April 14s. Then number 6, 28,000 of the April 12 puts. A lot of April, all April on this list pretty much, except for that one June. Number 5, 33,000 of the April 11 puts. Number 4, 33,000 as well of the April 10 puts. Number 3, 37,000 of the April 15 puts. Numero due here, our final call on the list, 41,000 of the April 20 calls. Someone likes that 20 strike. Remember, that was the size open strike in March as well. So someone likes piling in on that 20 strike, probably overriding it, but let's hope they're overriding it. But still, 20 strike, once again on our radar. And number 1 with a bullet out there, the April 14 puts, 60,000 of those bad boys open. Those are looking pretty good right now. We'll see how this progresses out here, but a decent amount of size out there. Mr. Meatball, I know you've been watching VXX of late. We're getting close to that perilous point there where we're expecting news any day out there. Are you of the same mind as your counterpart out there, Mr. Rock Lobster? Are you kind of washing your hands of VXX until you hear more about it?
Well, I did buy some really inexpensive out of the money puts a few weeks back that I'm still holding, but definitely dialing back the trading until we do see it trade, sub 10, and then you look at the reverse split. I mean, I don't understand why UVXY, which I'm sure we're going to get to in a second, has an already reverse split, because it's absolutely destroying the volume in that name. And yeah, I think you're going to see both of them reverse split. Maybe they want to do it together at the same time. I don't know.
Watch, so wait till right after the show is done to announce it going into the weekend there. But yes, so far at least no info on that, listeners. Going out to UVXY, you kind of just mentioned it, Mr. Meatball. That one also a wee bit lower than it was on our last show a couple of weeks ago, down almost exactly a point. It was 5.9 on our last show, 4.9 coming into the start of today's show. Same deal from a volume perspective out here. Both VXX and UVXY were starting to threaten VIX. They were starting to cross or threaten that 400,000 ADV threshold. And now in the last couple of weeks, they've just fallen off a cliff. ADV in UVXY now shy of 300,000, 293,000. That's down a whopping 86,000 from our last show. So the use case for both of these products, which is still predominantly downside, going away as these things keep eroding to near zero with no talk of reverse split. So people are clearly keeping their powder dry out there, and that's being reflected in these numbers. Today, a pretty anemic 136,000 contracts on the tape. So there's a good chance it won't break that already lower ADV level out there today, let alone the numbers they had a few weeks ago of around 400,000. Let's do a quick top five out here in terms of positions in UVXY. Number 5 cost you 24, almost 25,000 to break into the top 5 in UVXY. That gets you to the April 5 halves. These strikes are kind of ridiculous now, but that's where we are at 490 in UVXY. Number 4, we've got the 31,000 of the April 5 calls. Number 3, 32,000 of the April 11. So interesting strike there. Number 2, 37,000 of the June 5s. And number 1 with a fairly small bullet, 38,000 of the April 5 calls. Mr. Meatball, kind of the same deal here. It's kind of a wait and see story out here in UVXY. You sound like you're even more anxious for the split here than you are in VXX, sir.
Yeah, there's just nothing to do with a $4.85 stock that drops every day. It's very, very difficult to trade. So that is one that I don't know what the deal is, but the sooner they announce that 6 for 1 or 8 for 1 or 10 for 1 reverse, the better, because then I will be all over it. But who wants to pay 92 cents for the May 5 calls when it's trading 487? Nobody.
Clearly, nobody. You're right, because the numbers are pretty anemic out there and getting worse. So yeah, they have to be seeing these numbers over there. They have to be hearing this feedback from their clients and customers. I would imagine they would want to get that going out there. But yeah, so far, at least for all of you who have asked, no info. They unfortunately don't inform us here on the show before they announce the reverse. That would be nice. That would be considerate of them. But alas, that is not the case. Alas, it is also kind of the dregs right now when it comes to single name earnings volatility. You got a few names popping off this week. If you were really excited about WD-40 and Levi's, then we got you covered there. But I think it's more exciting to look ahead a little bit, because if you are one of those out there who likes to sink your teeth into some nice concrete earnings straddles and analyze some earnings vol, we know there's a lot of you out there. We got some new numbers coming up for ORATs. Let's just wrap up the season so far. This season, I've been beating this drum since it started. It's kind of been a disaster for vol buyers, and that's pretty much how it's winding up here. Average of about 77 cents on the dollar. So if you bought a straddle out there, if you bought a basket of all the straddles, which would be expensive, but if you bought a basket of all the straddles out here this earnings season, you made back about 77 cents on your dollar in terms of bang for your buck. The worst weeks, week 1, 56%. You got cut pretty much in half. Week 2, 60%. So pretty darn bad there as well. Week 3, week 4 were your best bets, 95% and 99%. So you almost broke even those weeks. And that was kind of about the best you could hope for. Week 5 was 73%, and week 6, a disgusting 52%. So all of it averaging into 77%. I was kind of on record early in this season when we were seeing how some of these things were being priced. It seems like they had squeezed a lot of the vol out of these, and we were at that inflection point where maybe we would start outperforming again. But Alas, no. It's more vol annihilation from a single name perspective. But you know what? The nice thing about earnings is that there's always more around the corner, and that's where we find ourselves right now. Coming up next week, actually, we got some names popping off again, which is kind of nice to see. Everyone's favorite, kind of back there in that meme category. I'm intrigued by that meme vol index. Maybe we'll have to start putting something like that out. I think that would get some traction. Bed Bath & Beyond, they're popping off next week on the 14th. Remember, they were back in our whole GameStop versus Bed Bath & Beyond death poll that we did on the show not too long ago, back towards the end of last year, yet how things have changed, at least on the GameStop front out there. Coming into this report, Bed Bath & Beyond, $28.31. They were pricing in $4.27, a little bit rich compared to the previous moves of about $4.10. So that could argue that one's had some vol of late, so they could argue that's warranted. Now we get to some of the financials, which we know is kind of usually the onset of earnings season proper. JP Morgan, 155 pretty much coming into this report. They were pricing in $4.54 in the past. They've moved to $2.80, so quite a bit of extra juice in JP Morgan. The financials have been an interesting one to watch of late. Bank of America, let's see if it's something similar out there. They were at $40, almost even going into this report. They were pricing in $1.25. In the past, they moved to $1.12, so not quite as much juice in Bank of America as we're seeing out there in JP Morgan. Getting on out to the beverage front, let's go to PepsiCo here. They're on the 15th. By the way, the other names are all on the 14th I was just talking about, except for Bank of America. They're on the 15th as well. PepsiCo announcing on the 15th, 143 and about a half. They were pricing in $2.65. In the past, they moved $2.54. So a little bit extra vol. If past is prologue, all that extra vol will be wiped out immediately, but we'll keep an eye on these. It's nice to have some actual names in the hopper again. You can find all these move reports for yourselves completely for free, theoptionsinsider.com. Click on that options news and articles tab, and you're off to the races. While you're there, hit us up with some questions or comments because it's time for the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail, the portion of the show where you folks take the reins, your questions, your comments, your insights. Kick it off here. This is a good one here from Alanist. A little long, but it's a good one nonetheless. He says, can you guys discuss VRO? What exactly is it and when should I pay attention to it? I've been trading weekly VIX options for a little while now. I know that the options queue off of the VIX futures rather than the cash. Well, ballyhoo for you there, Alanist. You've been listening to the show. He goes on to write, so I've been watching the front month VIX future for an idea of where my options will expire. But this week, VRO went out at 1774 while the front month VIX future was still north of 19. I know you guys have said to avoid VIX settlement for this very reason, but I'm really just curious to try to figure out where I should be gauging the at-the-money for my VIX weekly option strikes. I had the VIX 18 puts, and I thought they were worthless and went out at 26 cents. Same with the 19 puts that I thought were out of the money. All in all, my trade worked out fine. Well, that's good to hear. But it could have been much better. Second part of my question, usually I limit you to one, but it's a good question. Second part of my question has to do with Spikes options. I've been listening to the show and trying to learn about these products so I can trade them. Are they planning to add weekly options to Spikes in the near future? Also, does Spikes have something analogous to VRO where I have to watch out for a strange settlement procedure every week? Or can I just watch the Spikes index to know where my at-the-money strike is? Thanks so much for all of this programming. You guys are the best. No, you guys who ask all these great questions are the best. I like your handle there, Alanist. Maybe going for alienist and tweaking it a little bit. Either way, I like it. But Mark, he brings up a good point. We've touched on VRO a little bit in the past, but I don't think we've ever actually sat down and explained on the show what the heck it is, let alone why it's important, sir. So maybe let's start there, Mr. Meatball. Why should listeners pay attention to VRO? What is it?
Yeah, well, so VIX and Spikes, because Spikes does have a VRO. Stop me if I'm telling tales outside of school, Shelly. Spikes does have a settlement procedure that's essentially VRO. And what happens is that they price everything based on trades. So it's all the trades on the open across a whole swath of strikes for, I forget the exact period of time. And that creates the actual settlement for both the future and the option contract at the same time. So the reason why we tell you don't trade VIX and spikes into settle, especially retail, is because that VRO is more in VIX and less than spikes. Spikes' settlement procedure is a lot more stable than the VIX, and I know they've done some tweaks to VIX itself to make it less crazy. But you can have some VROs that are above or below where the cash VIX is at the time by more than a point. I saw the VIX trade. This is back when VIX was in the single digits, but I think we saw a 9 settle when the VIX was still trading 11. And it was all on that settlement. So you have to be very careful in going into VRO, which is the settlement of VIX and spikes. And my understanding, and Shelly, I'd love for you to expand on this. Spikes does do a better settlement procedure than what they're trying to do in the VIX itself.
Yeah, so there's multiple answers to the question, and there's multiple questions here that have been asked. The settlement process, we'll address that first. What we do is different than what is done in VIX. And as I think I've mentioned in the past, I give SEBO a lot of credit. They've made modifications to their settlement process over the last year and a half. One, to avoid the possibility of manipulation of the index. And they've predefined the strike range because there's a lot of things that go into the pricing of the index at settlement. We do not have weekly options on spikes and have no current plans to list weekly options in spikes. So you have weekly settlements in VIX. We just have monthly settlements in spikes. One of the primary reasons why we won't list weeklies for the time being is the strike ranges that are available in the SPY weekly options aren't near broad enough to support the full product and to have the proper calculation done. CBOE's VIX product is calculated off the SPX, which is a proprietary product at SEBO, and they can list any strikes they want. So we're bound by that multi-list rules and what options we can and can't list. So we don't have the freedom to list way far away wings in the 30-day weeklies. That being said, the settlement itself, you have to have an understanding of how an index works and how market makers tend to hedge their position or how institutions tend to replicate their positions at expiration. If a firm has a position on whether they're long futures or long option deltas that are expiring, they need to replicate that position with the basket of options that replicate the VIX or spikes product. And that will cause there to be either buy or sell programs at the opening that impact that settlement. And you can get into situations where there are huge imbalances one way or the other that cause those openings to be skewed down or up, depending whether it's a buy program or a sell program in the individual options. So you can have a situation where the settlement is significantly away from the cash price. That being said, our product settles based on SPY options. The VIX settles based on SPX options. SPX is far less electronic than SPY. It's singly listed. It's 10 times the price. It's I guess now it's a $4,000 index, where SPY is $410 today, I believe. But there's just so much more liquidity on a moment-to-moment basis electronically in SPY than there is in SPX. So that's why our settlements tend to be, maybe I use the term, more mellow than what happens in VIX land.
Great question there, Alanist. You get my vote for question of the week because you're right. It's a seemingly innocuous thing, but it is important. You're out there, you're trading in the weeklies or whatever it is. You're trading VIX, and you're looking at these products, and you're watching the cash, you're watching the futures, and all of a sudden you have this kind of weird aberrant VRO thing that pops up there, and that dictates the outcome of your position, which is, again, why we said many times, take your stuff off. You don't need to you don't need to be subject to this roll of the dice if you don't have to be. This week, it was kind of low. You're right. So it was a little bit of, I think, a surprise to some people. But then again, if you're surprised at this point by anything that happens in the settlement process, you haven't been paying attention. So yeah, that's why we say just close it out. That way you know what you have, you know what things are worth, and you don't have to deal with the vagaries of these settlements. But hey, great question out there. It is important if you're trading these things. You should understand how they work. And now it's time for all of us to see if we can come to grips with this crazy market. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
I'm with you, Tony, in our chat saying, thank goodness for podcasts where I can slow this down and replay it. Yes, that's why we do this stuff out there. It is important. If you're trading these products, and clearly you're listening to a show like this, so you're probably at least interested in trading these products. You want to know how they work. So that portion of it, that settlement portion, is where the rubber meets the road for a lot of people. It's also where so many people get confused and so many weird things can happen. So pay attention. It is certainly something that you should be familiar with. And now it's difficult for us here on the show sometimes to be familiar with volatility, particularly when we have to do the seemingly impossible task like we had on our last show a couple of weeks ago to try to prognosticate VIX and spikes for a couple of weeks into the future. 1 week is hard enough, but going out for multiple weeks, that is orders of magnitude more challenging. Coming into the end of the show today, we got spikes at about a 17 quarter, and we've got VIX cash a little bit shy of the 17 handle, about 1690 or so. So spoiler alert, it was myself, Tom from MIAX, and the Rock Lobster on our show a couple weeks ago. None of us had a 17 or a 16 handle in there, so we did not win. But then again, we made our prognostications, and right before we realized that we were off the next week. So then we kind of added some addendums to it. The Rock Lobster wanted to keep his at 2001. He thought 2 weeks out, he thought VIX cash would be around that level. He thought a little bit more vol was ticking back in, actually. I was at about a 19 and a quarter on mine. And Tom was actually at an 18 and a quarter, and he looks like he was the closest to victory. Because actually, for our first guess, which was for last Friday, VIX, of course, and spikes went out on Thursday evening of last week. They closed at 1733 and 1810, respectively. So Tom was pretty close on the spikes front, which makes sense. That's his product. So he was about 0.15 off on the spikes land. So we got to give it to Tom for last week. The Rock Lobster and myself, we were both off. And this week, shy of the 17 handle, so nobody wins. 17 and a quarter, Tom's almost exactly within a point again. So I guess we'll give it to him, even though, again, A, he's not here, and B, that's the outer boundary of what we would consider even to be close to a victory. So I'm setting the table by saying there really were no winners that were at least on the show this week at least. So let's go around the horn. Mr. Meatball, I will be charitable. I will give you pride of place. I will allow you to choose. Do you want to go first, or do you want me to go first?
Well, what was my guess from 3 weeks ago? Because I want to say...
I think you were like 1921 or something like that. I think
from 3 weeks ago. All right, let's go look at this. I'm gonna because I want to pull this up. I'm thinking that it was like I thought it was like 1717. That's my guess, because
I will put our crack producer on to see if she can find it for us.
Yeah. So I'll go first. How about that, Mark? And I got to be honest, I think we're going to see the wrong side of 16 next week. I think I'm going to go 1583.
1583. Usually I say an excellent year. Not a lot really happened that was of note in 1583. That's getting down. I know you've been talking up those 16 puts out there in VIX land. That would certainly be in keeping with this year. 1583. That's almost exactly a point below where we are right now in the cash land out there, and even more on the spikes front. That's a lot of vol to come out. But I got to say, given what we're seeing out there, it's kind of hard to argue that more vol is not going to be coming out. Question is how much? And do we get that blip in between that lifts us back up and kind of erases the whole thing? These are the questions to ponder. Listen, I'm going to say we get a little bit less vol this time next week, but not a ton less. Like I said, we're at about 16.75 or so in VIX cash right now, 17.25 or so in spikes. I'm going to say we're going to be 16.45. There we go. I haven't 16 handle I haven't had in my prognostications in quite some time either. So there we go. 16.45 for myself, and the meatball coming in at the bottom there at a 15.83. All right, everybody. That music means we come to the end of another excellent journey through the world of volatility. You got a question like the Alanists did here today? You want to hit us up? Maybe a product you'd like us to talk about here on the show that's something vol related. Somehow we don't squeeze it into the hour-long vol extravaganza that is vol views. Hit us up. You know where to find us. TheOptionsInsider.com is kind of the home base for all of our stuff. You can also find us at Options on all the major social media platforms. But go at us directly. Questions at TheOptionsInsider.com. All of that works. It all gets to us. And Shelly, if folks are intrigued, and clearly they are, about how Spikes works, maybe they have more questions, they want to hit you guys up, maybe they just want to learn more about Spikes, where should they go? What should they do, sir?
Go to our homepage at MIAXoptions.com. You can choose Spikes from our proprietary product list, or just MIAXoptions.com/Spikes.
There you go, MIAXoptions.com/Spikes. You can go there, get the data, get the recent quotes for Spikes. You get the press releases if you want to know more about when V spikes, everything else is coming out. Keep an eye on that page. You can even get a link to a cool little show called Volatility Views. What more could you ask for from a volatility-oriented destination? And you know where to go if you want to learn more about execution services and trading technology. Straight to matrixexecutions.com. Matrix, M-A-T-R-I-X, executions.com, the place to go for all of that information about execution services and trading technology. It's pretty straightforward. And Mr. Meatball, where should they go if they want to learn about VRO or perhaps talk about some small lot Robinhood trading? Where should they go? What should they do, sir?
Yeah, we put out reports every night, every morning about what's going on in the world of volatility and what's trading. You got to be a member of our email list to get it. Go to optionpit.com. Next Wednesday, I am doing a webinar on volatility. So make sure you check out your email inboxes for that. I'm going to go through a lot of important stuff like retail traders playing whack-a-mole and traders like me trading volatility and VIX and spikes.
There you go. Want to learn more about retail whack-a-mole and ball and all the other good stuff? Optionpit.com is the place to go. And on behalf of Shelly, everybody over there in MIAX land, and everybody over there in Matrix Executions land, and the Meatball, everybody over there in Option Pit land, and indeed myself, I thank all of you out there for downloading, streaming, and subscribing. This unfortunately concludes our broadcast week here, but don't worry. Back again on Monday, bright and eager, kicking things off with the option block all the way through to Friday, another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at MIAXoptions.com/Spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or Search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.